Hello everyone, I'm Kuntal. Welcome all to the webinar. As you all know that we conduct webinar almost every week to enhance your knowledge and to introduce the features of Busy. So today we are going to cover up an important topic, or you can say an important feature of inventory in Busy, that is the stock valuation with different methods. First, we'll understand what is stock valuation, what is inventory. We'll understand the theoretical part, and then we'll see practically the configuration in Busy. Also, we'll understand the calculation with a live example. So I will also share an Excel sheet that will include a live example to understand the calculation of different method of stock valuations. So we'll start with the PowerPoint presentation, that is the theoretical part. So in my screen, you can see the first slide that is coming, that is the session objectives. So let's have a quick look on the session objectives. So today's objective is to understand what is inventory. We'll first understand what is inventory. Then we'll understand the type of inventory. Then we'll understand what is stock valuation method. Next, we'll understand the type of stock valuation method. And then we'll see the practical demo in Busy. After that, you will have an QA round where you can raise your queries on the QA chat box. We will be happy to answer your queries or your questions. Starting with the first slide, that is what is inventory. So inventory is basically referred to a goods, material or products that a business hold for the purpose of resale, production or use in operations. That means product, or you can say it's a kind of material that you store in your godowns that is mostly used for the purpose of reselling or for the production or for any other operations related to stock. It represents the stock of item a company keep on hand to meet customer demand and support its day-to-day business activities. That means it's a kind of stock that a company or an organization keep on hand or keep in our godown to meet the customer demand. That means if customer place an order for a product, then you can simply you can take the order and you can provide the material to your customer. So it's help to maintain the or to it's help to complete or fulfill the customer demand, and also it supporting day-to-day business activities. So stock is the most important, or you can say one of the important thing in our company or in our organizations to roll on our business. Coming on the types of inventory. Now, there are different types of inventory. It may be a raw materials, it may be a components, it may be a work in progress. Somehow somebody may define this as a semi-finished product also. That means if I have provided any raw material to your uh, manufacturing center, they are working on it, and till that it has been done in or it has been in work in progress status. So material is in semi-finished mode. Finished good, or it may be a distribution inventory, or it may be a maintenance or repairing inventory. So if some material come for the repairing purposes, and that item is also treated as an inventory. So these are the type of inventory, or you can say the mode of inventories that are mostly seen in the business industries. Now coming in the stock valuation method. What is stock valuation method? Basically, stock valuation method refer to a technique used to assign a monetary value to a company's inventory. That means if suppose you have purchased any material, you have kept your material in your go down. So at the end of the month or at the end of the year, you need to, or you between the period also, you need to monitor your closing stock value, that how much amount of stock is available in my go down. So stock valuation method help you in that case. The primary goal is to accurately measure the cost of good. That means if you have purchased the material and if you have sold the material, so it will also help you to maintain the cost of good of that materials, help by the business for the purpose of financial and reporting and decision making purpose also. That means if you get to understand that how much cost of good is available in your go down for your material, then you can take a decision accordingly in your business. So it also helps in the financial reporting and decision making. Common method includes, that means in most industries we find the stock valuation method, they commonly use the FIFO method, the LIFO method, and the weighted average method. So we'll understand all these methods one by one, theoretically and practically on this webinar. Coming on the next slide, that is the type of stock valuation method. So there are different methods. As I says that uh, there is a weighted average method. So you can get to see, or in many industries they maintain their stock valuation in weighted average method. Many industries or few many industries may maintain in FIFO method. Other methods like there is LIFO method. There is last purchase method. There is last quantity in method also. There is a last sales method. There is a self-evaluation method. There is an average price quantity in on the basis of quantity in, and average price on the basis of invoice. So these are the type of method that you can maintain or you can follow to calculate your stock valuation, or you can to calculate your closing stock valuation. Now coming on the weightage average method concept. So what is weightage average method concept? Weightage average inventory valuation is a method where the cost of goods sold and ending inventory is calculated by averaging the cost of all units available for sale during a specific accounting period. This is done by dividing the total cost of good available for sale. That means the total cost of goods that is available in your go down for sale by the total number of unit available for sale, means the total number of quantity available for sale. It provides a blended or weighted average cost per unit. So what is the formula of weighted average method? That means if you have purchased the item, so in that case the stock is getting in, along with that you have also had some opening. So the formula defined in this way, like opening quantity plus in quantity divided by the uh, the number of you can say uh, the number of quantity. So sorry, the formula will be in this way: opening value plus overall purchase value or the quantity in value divided by the number of quantities. That means it may be opening quantity plus in quantity. So if your total in value along with the opening value is 5,000, it will be divided by your total quantity. That may be opening quantity plus in quantity. So this is the actual formula of weighted average. FIFO method. Let's understand about the FIFO method concept. FIFO means first in, first out. This is the full form of FIFO method. Is an inventory valuation method where the oldest, or you can say the earliest inventory item are assumed to be first one sold or used. In other words, under FIFO, the cost of goods sold reflect the cost of old item in inventory, while the ending inventory is based on the cost of the most recently acquired item. We'll understand with an example. I will share an Excel sheet to understand the calculation of these all kind of valuation methods. So basically, FIFO means uh, first in, first out. That means the whatever stock you have kept in or have purchased earliest, according to that the valuation will reflect. Whenever you sold the product, the remaining quantity valuation will reflect according to the first in, first out method. LIFO method, last in, first out. That means if you have uh, purchased on 1st April, 2nd April, and if you have sold in 3rd April, then in that case, in case of LIFO method, your previous transaction, or you can say the previous token value, will reflect as your remaining quantity stock value as a on the basis of LIFO method. So LIFO method is an inventory valuation method where the newest means the latest inventory that you have assumed to be first one sold or used. That means whenever you're going to sell the quantity, so before going to sell the quantity, if you have done any purchase or if you have done any stocking before that sale entry, before that current sale entry, so that valuation will be reflect in the remaining quantity of your stock. So it will be on LIFO method. So in LIFO method, the cost of goods sold reflect the cost of the most recently acquired item, while the ending inventory is based on the cost of oldest item in the inventory. Coming on the last purchase. So last purchase is a simple method. It will be understand very easily, because last purchase method means, so whatever is your last purchase transaction price or the transaction value, so accordingly that value the remaining quantity or the remaining closing quantity valuation will reflect. Means under last purchase method, closing stock is valued at the price of the last purchase. So let's say for example, if you are purchasing 100 rupees, and that is the last purchase entry that you have done, and after that your remaining quantity is, after selling the quantity, your remaining quantity is for example 5. So your last purchase rate was 100 rupees, so it will calculate the valuation of your 5 remaining quantity on the basis of 100 rupees. That means the valuation or the price of the closing quantity will be 100 rupees if you follow the last purchase valuation. Last quantity in. Under last quantity in, what is the difference? Look, here is an simple scenario where you can go with the previous slide. It's showing last purchase. That means it will only, or the system will only check the last purchase transaction. But in case of last quantity, the system will not only check the last purchase, it will also check the last quantity in transaction. It may be through material received entry, it may be through production entry, it may be through stock journal entry. So whatever will be the last quantity in entry, so it may be against a purchase entry, or it may be against a stock journal entry, or it may be against a production entry. So that valuation or that entry's price will reflect as your remaining quantities valuation price. So if you follow the last quantity in method. Last sale. Here, like last purchase, if you have done a sale entry on 5th of April, for example, with a amount of 200, with a rate of 200 rupees. So if your remaining quantity or your remaining or your closing quantity is 2, suppose you have a closing quantity of 2 quantity, and then in that case your closing value or your closing valuation price will be 200 per quantity, because you have last sale the product in 200 rupees. Okay, so this is if you maintain in last sale method. Self evaluation means it will not follow any LIFO method, it will not follow any FIFO method, any last purchase, any last receive. Self-evaluated means you are deciding that what pricing you want to maintain, or you want to put to maintain the valuations. So self-evaluation means you are deciding the valuation. So let's say, for example, whenever you are going to create an item in Busy, you will find an option in the item masters where you will find to put the sale price, the purchase price. Similarly, you will find an option to put the sale valuated price also. So if you put any price over there, self-valuated price that is written on that item master screen. So whatever price you put on that item, accordingly that price the closing stock valuation will reflect for that particular item. So that means it will not maintain any FIFO or any LIFO method. It will maintain only the valuation that you have mentioned or you have fixed in the item master. That is the self-evaluation price. Average price, quantity in bracket it's written quantity in because average price quantity in means it doesn't is not only include purchase, it will include the stock in entry also, it will include the production in entry also. So the average price quantity in means under average price quantity in method, what will be the formula will be closing stock value will calculate on the basis of what you can say the closing stock value will be dividing the total amount in by total quantity, means whatever will be the total amount that will get divided by the total quantity, total balance quantity, then it will calculate the average price of or the valuation of the remaining quantity. Average price invoice, it will only calculate on the basis of the invoice, not the sale invoice, only the purchase invoice. So here you can also see the scenario or you can see the similarities between the previous slide, average price quantity in, and here in this slide you can see average price invoice. So difference is that quantity in means it will include the stock in entry, it will include the purchase entry, it will include the production entry also. Against that, it will calculate the valuation. But in case of average price invoicing, it will only include the purchase transactions, not also the sale transaction or any purchase challan. So it will only get calculated on the basis of purchase transaction, or you can say a purchase invoice. So under this average price invoicing method, closing stock is valued. So closing stock valuation will come on the basis of total amount divided by the total quantity through purchase voucher. That means whatever purchase entry you have done. So whenever you're going to do a purchase entry, the stock is getting in. So let's say, for example, you have done 3 purchase. One purchase you have done with 10 quantity, one purchase you have done with 5 quantity, another purchase you have done with 10 quantity. So total quantity is near about 25. So it will divide the total amount, means the total purchase amount by 25. That is the total quantity of purchase. So in this average pricing invoicing method, it will not include any sale transaction quantity or it will not include any purchase challan transaction quantity to calculate the closing stock valuation. So now this is the theoretical scenario as I have explained through this PowerPoint. Now let me share a live example through an Excel sheet. I hope the screen is visible to all of you. So here, first I'm showing you the scenario. Let's understand this scenario. This is an item ledger, or you can say a stock ledger. So in stock ledger, this is my item. I have mentioned an item called pen. Okay. So this is my stock ledger where you can see in 1st of April, my opening stock was 10 quantity with a price of 40 rupees per quantity and the opening value was 400 rupees. So in this row, you can see that in this date, I have not done any purchase entry or I have not done any stock in entry. So that's why that whatever opening quantity was on that date, it was reflecting as my closing quantity also. Okay. Now on 10th of April, I have purchased a pen with 10 quantity with a rate of 60 rupees. Now you can see my closing quantity has increased to 20 and my amount was also increases because my opening amount was 400 and my quantity in amount was 600. So total amount is my 1000. Okay. So in the 20th April, I have done another purchase entry with the 10 quantity with a price of 80. Now you can see the quantity is also getting added. So it's getting added with 20. So 20 plus 10 equals to 30 quantity showing and the amount, the value is also getting added. How it is getting added? So 400 was my opening quantity. With 400, I have added 600. So the daily balance of my amount come about around 1000. So with 1000, I have added 800. Okay. Or you can say 400 plus 600 plus 800 equals to 1800. So in this way, our value is getting added. Now, question is that this is my stock ledger. Now, after certain quantity in or certain quantity out or for addition or subtraction, what will be my last closing amount or what will be my remaining closing amount of my remaining quantity? Okay, so we'll understand one by one. First, we'll understand on the basis of weighted average. So let me click on this weighted average sheet. So see, the scenario is same. So if you are going to calculate on the basis of weighted average method, so what will be your closing amount? Here you can see the question mark is coming. What will be the actual closing amount for this 35? Because this 35 is my closing quantity that is available in my go down. So if I want to calculate the closing value of this closing quantity according to weighted average method, then what is the formula and how it will come and what will be the actual value against this weighted average method? So let's understand in this scenario. So this up to this scenario, it's similar that I've shown in item ledger. Now, if I understand in the basis of weighted average, then what weighted average formula says? Weighted average formula says that if you have a opening value, so my opening value is 400. So opening value plus quantity in value. So my quantity in value is this 600 plus 800 plus 900 plus 1000. So total cost of goods divided by the total quantity. So total cost of good is 400, that is the opening amount, plus the quantity in amount. It may be get in through purchase, it may be get in through purchase challan entry also, whatever may be. But it will be the total quantity in value plus my opening value. So it will come the cost of my item divided by the total quantity. That means the total in quantity. So you can see the total in quantity is 10 plus 10 plus 10 plus 10, and then along with my opening, because my opening quantity is also a stock in quantity, because this quantity is also available in my go down. So it will also include in my total quantity. And now you can see the cost of good is coming 3700. If you add all this value, you will find an amount of 3700, and if you add all this quantity, then you will find a value of 50. So if you divide this, then you will get the actual closing price of your closing quantity. So this is per quantity price, that is 74. That means here it will be 74. Okay. And here the amount will be 2590. How 2590 is coming? If you multiply 74 with 35, then the value will come around 2590. Okay, so you have calculated the closing price per quantity, and if you multiply with the number of quantity that is remaining on your go down, the closing quantity, then you will get the closing value of your total closing quantity. So this is on the basis of weighted average method. So I'm repeating once again, the weighted average formula is total opening value plus total quantity in value divided by total opening quantity plus total quantity in. The quantity in may be through purchase, through challan, or through stock journal, or through production, whatever it may be. Now, if we understand on the basis of FIFO, that is first in, first out method. So you can see the scenario is similar over here also. Now, in case of FIFO, what will be the per quantity price and the closing quantity valuation on the basis of FIFO method? Now you see that I have done a, or there is an opening on 1st of April. So what FIFO method defined? FIFO method defined that if you have sale the product, you can see I have sale the product on 30th April. So I have sale how much quantity? I have sell 15 quantity. Okay. So if I have sell 15 quantity, then this 15 quantity will be adjust with my opening quantity first. What FIFO says, if you have any opening, that it will be adjust with your opening, and then after opening, if there is any purchase, it will get adjust with the next purchase, or after the opening, if there is any purchase, it will adjust with that purchase. So you can see that I have total sale quantity of 15. So I have an opening of 10 quantity. So you can see here the scenario. I have an opening with 10 quantity with the price of 40 rupees per quantity, and the opening value is 400. So if I adjust this sale entry, this 15, or I adjust this sale quantity 15 with the opening quantity, then there is no pending quantity, because it is 15 and it is 10. So I have completely adjusted the 10 quantity with the opening quantity. So in that case, my pending quantity on the basis of opening is 0, and on the basis of opening, its all amount is also 0, because it have fully adjusted with my 15 quantity. Okay. Now remaining is my 5 quantity. So that 5 quantity will be get adjust with the next purchase after the opening. So it is the first purchase that you have done after opening. So you have done the first purchase on 10th of April. So it will get adjust with this entry, or it will get adjust with this value. So from this 10, you have adjust 5, because 5 was remaining from the sale quantity, because 10 you have already adjusted with the opening quantity. So 5 is remaining. So that 5 will adjust with this 10 quantity, or with this 600 amount value transaction. So here you can see that it's showing over here. This is the first, after opening, this is the first purchase that you have done. From here, you have your pending quantity showing 5. So you are adjusting the 5 quantity. That means in this 10, 5 is pending against the purchase, and your pending amount is also 300. That means 600 is according to 10 quantity. If you are adjusting 5 quantity, then your amount will be 300. So 300 is the balance amount, or you can say the pending amount. Okay. So your total sale quantity has been adjusted fully. Now remaining quantity and remaining value is this 20th April, 25th April, and 28th April. So from here only 300 amount has been adjusted, because we have adjusted the 5 quantity. From here it has been fully adjusted, so there is no balance amount. So 400 has been fully adjusted. So you have adjusted the 5 quantity with 600, then your adjusted amount or the balance amount is 300, but these are amount still remain, it has not been adjusted. So what will be the total valuation amount of the remaining quantity? So our remaining quantity is 35. How the 35 came, let me understand, show you the calculation also according to the quantity. First, you have done an opening of 10 on 1st April, then you have purchased 10. So total is coming 20, means 10 plus 10 equals to 20. Then 20 plus 10 equals to 30. Then 30 plus 10 equals to 40. Then 40 plus 10 equals to 50. Okay. From 50, 15 is getting deducted because you have sale in 30th April. So the remaining quantity is 35. So we are going to calculate the price or the value of the remaining quantity. So you can see here is also, if you add this quantity, you will find the total quantity is coming 35. So from this first purchase, you have adjusted 5 quantity, the remaining quantity for the sale, and the remaining amount is 300. So 300 plus 800 plus 900. 800 means the second purchase that you have done on 20th April. 900 means the uh, purchase challan that you have done in 25th April, and another purchase challan that you have done in 28th April. So 300 plus 800 plus 900 plus 1000, okay, is equals to 3000. So if you divide 3000 by 35, then you will get the price of your per quantity. Okay. So actual closing amount or actual closing valuation according to FIFO method is 3000. Okay. And the actual price per quantity according to FIFO method will be 3000 divided by 35. That means it's come around 85.71. Okay. So here the price will be 85.71. So you can simply understand in case of FIFO method, what system is doing or what is the live example that is showing. That is, first, if there is any opening, then it will get adjust with the opening. For the opening will be get adjust with the sale quantity. And then after opening, if you have done any purchase entry, that is the first purchase entry, that purchase quantity will get adjust with the sale quantity, and the remaining value, if there is a remaining amount or if there is a pending amount, that right now you can see there is a pending amount of 300 because I've adjusted only 5 quantity out of 10 quantity. So for 10 quantity my amount was 600. So if I mention 5 quantity, then if I mention 5 over here, then 5 into 60 means 300. Okay, so 5 quantity has been adjusted, that means 300 amount has been adjusted. So 300 is the balance amount still remain. So balance amount plus the remaining balance amount is the total amount for the remaining quantity. Now coming on the basis of LIFO. In case of LIFO, you can see the transaction scenario is same. I have kept the transaction scenario same for all the method, but how the calculation is coming. So in case of LIFO, you can see this option, this position, you can figure out on this position. In case of LIFO, what I have done, I have not adjusted the 15, that is the sale quantity, with any opening quantity. So in case of opening quantity, total pending quantity is 10, and my opening amount is also still kept in balance. Okay, I have not adjusted with my first purchase entry. I have not adjusted with my second purchase entry. Okay, I have not adjusted with my first purchase challan that I've done on 25th April. Okay, here I will say LIFO method means last in, first out. That means whenever you are going to sell the product, before sale, if you have done any stock in entry, it will get adjusted with that stock in entry first. So first you can see out of 15, you have first adjust the 5 quantity, or you can say it has been first adjust with the uh, 20th April transaction, that is the purchase transaction. So 15 has been adjusted with this 10. So you can see it has been adjusted with 10. So in this scenario, pending quantity is 0. So 1000 has been adjusted. Okay. Now 5 is remaining, still remaining. So 5 will be adjusted with the previous transaction, previous entry. It may be a purchase entry, it may be a challan entry, it may be a production entry, or it may be a stock journal entry, whatever. So first it getting adjusted with the previous transaction that I've done before sale transaction. So sale quantity is getting adjusted with the previous transaction, and then if there is any remaining quantity, then it is getting adjusted with the next previous transaction. Okay. Now you can see here 1000 is, there is no balance of 1000 in the amount. There is a balance of 450 because I have adjusted with this transaction. After getting adjusted with this transaction, I'm getting adjusted the remaining quantity with this transaction. So in this transaction, I have done the transaction with 10 quantity, but I have a balance of 5 quantity in my hand that I need to adjust. So I'm adjusting that 5 quantity with this transaction. So if I multiply that 5 into 90 per price, then my actual amount will be 450. Okay, but you can see here it's showing 900 because this is a purchase challan entry. But if I'm going to adjust the 5 quantity with this purchase challan entry, so once I mention 5 quantity, then my amount will also get changed because I'm calculating the amount on the basis of quantity and price. So if I mention 5 into 19, the 90, then the amount will come near about 450. So 450 is the balance amount, and in the top you can see total 400, that was the opening amount, that is fully balanced. 600, that is the purchase entry. 600, that is also fully balanced, that is also not adjusted with the sale. 800, that is also not adjusted with the sale. And 900, that is adjusted with the sale transaction, or that is adjusted with the sale quantity or sale value. and this 1000 also adjusted with the sale value. Just imagine the scenario between FIFO and LIFO. If I show you on the FIFO, you will figure out that in case of FIFO, it was first adjusting with the opening, then adjusting with the next purchase. Okay. But in case of LIFO, it is adjusting with the purchase challan entry first, not with the opening or not with the purchase entry. In case of FIFO, you can see it's in case of FIFO, it is adjusting with the opening, and then it is adjusting with the next purchase. But in case of LIFO, you will find it is first adjusting with the previous challan entry that you have done before the sale entry, and then the next previous entry that I have done the purchase challan entry. So this is the differentiation between a FIFO and a LIFO. So LIFO will figure out the previous transaction after, or the previous transaction before the sale entry, and FIFO will calculate from the opening transaction, or it will calculate from the first purchase transaction. Okay, if there is no opening, then FIFO will calculate from the first purchase transaction. But in case of LIFO, it will calculate from the previous transaction that may be done before the sale transaction. Okay. In case of last purchase is a simple method where you can see what is my last purchase. My last purchase price was 80. Imagine last purchase, not last stock in, last purchase. That's why I'm reflecting the cursor over here. My last purchase is 80. After this purchase, I have not done any purchase entry. After this, I've done a purchase challan entry, and then I've done a purchase challan entry. So my last purchase is this 80 rupees. Okay. So my last purchase price will be 80 and my remaining quantity is 35, because you can see I have sold 15 quantity on 30th April. So my total quantity before sale was 50. After sale, my quantity has come to 35, because 50 minus 15 equals to 35. Okay. So in this case, in case of last purchase, your price will be 80. That means if you mention 80 over here, then accordingly that your calculation will come, the closing value will come 80 into 35. Okay, that is 2800. So this will be the valuation of my remaining quantity, total valuation of my remaining quantity on the basis of last purchase. Now in case of last quantity in, so if you figure out on the basis of last quantity in, then in that case, it will not only reflect purchase, it will also calculate on the basis of challan, or it will also calculate on the basis of stock in. It may be through production or it may be through stock journal also. So in case of last quantity in, your last quantity in is 100. You have done a purchase challan entry. So once you've done a purchase challan entry, in that case also your stock is getting in. So you have done a purchase challan entry with 100 rupees per piece. So if you want to maintain your valuation on the basis of last quantity in, then it will figure out the last price or the last quantity in price that you have done in the previous transaction before the sale. Okay. So here you can figure out the last transaction before the sale is 100 with the price of 100. So here it will be 100 per piece, and actual closing amount will be 3,500. 100 into 35 equals to 3,500. So if you figure out the valuation on the basis of last quantity in, then the closing stock valuation will be 3,500 for 35 quantity. In case of last sale, you will find out in case of last sale, that means it will only figure out the sale. Your last sale was done in how much price? Done in 200 rupees per piece. So here your closing stock price will be 200 on the basis of 200, and your amount will be 7,000, or you can say 200 into 35. Okay. In case of self-evaluation method, self-evaluation, as I said, that it will not figure out or it will not calculate on the basis of your FIFO or LIFO, whatever valuation you put, if I put here valuation 130, then according to 130, my valuation will come 4,550. That means if I mention a sell valuated price in my item master, accordingly that my closing stock valuation will reflect. So if I mention 130, then my value will become around 4,550 for the remaining quantity. Okay. Now coming on the average price quantity in. Here you can see average price. So there are two methods, average price quantity in method and average price invoice method. So in case of average price quantity in method, what will be the formula? So average price quantity in include all the type of transaction that reflect in the quantity in column. It may be a purchase transaction, it may be a purchase challan transaction, it may be a issue a receipt transaction, or it may be a production transaction. So here you can see the total value, the total cost of in quantity in value. That means it's including the opening also. 400 plus 600, that is the amount in quantity. 800, that is also amount in quantity. 900, that is also an amount in quantity. And then 1000 is also coming after sales. So it is also including the 1000 after sales. So it's also reflecting or it's also including the after sales transaction to calculate the average price quantity in. That divided by your opening quantity plus your total in quantity. Okay. So here is coming the average. So your total value is 3700 divided by total quantity 50, which coming around 74. Okay. But in case of weighted average, so there is a slight differentiation between an average price quantity in and a weighted average method. Okay. So in case of weighted average method, you can find the scenario that in case of weighted average method, the before sale, the closing amount was uh, near about, sorry, after sale, the closing amount was near about 16,000, sorry, 1,687. So 1,687 plus the 1000 that amount that you have done the quantity in entry through purchase challan. So that will get added and that amount will be divided by the remaining quantity, that is the 35. Then you can see there is a slight differentiation between an average price and a weighted average price. Okay. Now, if I understand on the basis of average price invoicing or invoice, so in that case, you can find the formula is coming for average price invoice. That means it will only include the purchase entries, not the sale entries or not the challan entries or not the stock in entries, only the purchase entry. So here you can see only the purchase entries, the 600 and 800. Okay. And also here purchase entry that you have done on against challan, that is 2400. Okay. So total will be 4200. That divided by the total stock in quantity. So your total stock in quantity is 50. Okay. So here it will come the exact price for per quantity. So the exact price for per quantity is 84. That means here the price will be 84 per quantity. Okay. And your closing amount will be 84 into 35. That is 2940. So these are the method and these are the calculation that helps you to manage your closing stock valuations of your item or your stocks. Now let's see in busy practically the configurations. Now in busy, how you can change your stock valuation or how you can manage your stock valuation. So what is the so where is the option from where you can enable the stock valuation or you can maintain your stock valuation? So that is on under administration. Okay. Under administration, you will find configurations. Under configuration, you will find features and options. And under features and options, you will find an option called inventory. So inventory, under inventory, you will find in the right side, you will find the stock valuation method. Here you will find the multiple valuation method: FIFO, LIFO, last purchase, last quantity, last sale, self-evaluated. If you select self-evaluated method, in that case, what you have to do, you have to go to master item and you have to select the particular item, and then you have to mention the self-evaluated price. You can see I have mentioned some self-evaluated price over here. So accordingly, that price, the valuation will show whatever will be my remaining quantity in my go down. So per quantity, the valuation price will be 120. Okay. On the basis of cell valuation method. Now, if I select this method, mostly we find that most industry use the weighted average method, the FIFO or the LIFO method. So if I select this method as weighted average, if I save this, now if I go to see the display stock report, stock status, closing stock alphabetical. If I want to see the detail, select all item, as I've created only one item. Now, if I want to see the value, I will enable this option. If I press OK, then it's showing me the valuation of 2590, because here you can see my closing quantity is 35. If I double click over here, it will show me the bifurcation. So in this date, I have purchased, I've done a purchase entry with 10 quantity with 600 amount. Okay, and the second, I've done a purchase entry with 800. I have an opening of 10 quantity with 400. So if you understand on the basis of FIFO method that I've shown you through an Excel, let me share the Excel once again. So here you can see on the basis of FIFO method, my whatever valuation is my coming. So it will reflect accordingly that. So it will adjust with my opening. Okay. So it will accordingly adjust with my opening. If I mention FIFO method, let me first uh, update this master balance once again. Now if I go to see the report, okay. So here, whatever valuation method you are reflecting, accordingly that your method will takes place. So if I mention FIFO, LIFO, rated, weighted, whatever method I have mentioned over here, so it will reflect accordingly there. Right now, I have mentioned weighted average method. If I select FIFO method, if I save this, now if I want to see the stock valuation on the basis of FIFO method, that was showing on the basis of weighted average method. Now I show you on the basis of FIFO method. So on the basis of FIFO method, see my closing amount is coming 3000. Here you can go through with the Excel. On the basis of FIFO method, my closing amount is coming 3000. In BASIC, you can see the bifurcation. Same thing I have done in my Excel to understand you the exact calculation. So you can see I have done I put an opening balance of 10 quantity with an amount of 400. I have done a purchase entry on 10th of April. I've done a purchase entry again on 20th of April. So after on the basis of FIFO method, my sale quantity will be adjusted with my opening balance first and then within first purchase. Okay. Then if there is any pending quantity remain, then it will get adjusted with the next purchase, or else it will calculate the remaining amount, and then it will figure out your actual closing amount against the FIFO method. Now, if I mention over here as weighted average method, if I save this, now you can see on the basis of weighted average method, automatically system is changing my stock valuation. So it's coming about 2590. My entry level is same, my transaction is same, but my valuation is changing according to the method. So in case of weighted average method, you can find out uh, on the basis of weighted average method, my closing value was coming 2590. So I have previously explained the formula of weighted average method. So according to that formula is reflecting on my closing amount of my closing quantity. So from here, if you want to change your valuation method, you can change. If you select last purchase or LIFO method, if you select LIFO method, let's see on the basis of LIFO method. You can see on the basis of LIFO method, my same item valuation will change to 2250. So you can see on the Excel I have shown on the basis of LIFO method, my valuation will be coming 2250. It's coming 2250. Okay. If you select other method, like for example, a last purchase method. So if I save this, so if you want to see the valuation on the basis of last purchase, then it will show you on the basis of last purchase. So it's showing 2800. Okay. So whatever balance is available, it will calculate on the basis of last purchase. So your last purchase is on the basis of 800. Okay. So it will get calculated on the basis of 800. So 800 is the per quantity price. So your last purchase you have done on 20th April. So your valuation will calculate on the basis of 20th April. So you can see it's calculating on the basis of 20th April. So 800 was the total value, means not the price, sorry, the total value, but the price is 80 rupees, the last purchase. So here you can see the closing quantity price is coming 80 rupees on the basis of last purchase. Last quantity in, so last quantity in, if you mention last quantity in, then it will only it will not only reflect on the basis of last purchase, it will calculate the last quantity in also. That means the quantity may get in not only in the basis of purchase, it may get in on various way. It may get in through material receive entry, it may get in through stock journal or production entry. So here you can see my last quantity in was on 20th April with a rate of 100 rupees. Okay. So here you can see the my closing quantity is 35 and my closing price is showing 100. So is this price is showing 100 on the basis of last quantity in method. Okay. So if I select here last sale, if I save this, so it will only calculate on the basis of last sale. So system will figure out what is the last sale or what is the last sale transaction. So here if I press enter and if I want to see the what was my last sale transaction, so my last sale transaction was on 30th April and I've done the sale entry with the rate of 200 per piece. So it will come on the basis of 200. So my closing quantity price is also showing on the basis of 200. Okay. Self-evaluated, if I click self-evaluated, so if I mention 120 as my self-evaluated rate or price in my item master, then accordingly that my valuation will reflect. So if I go to stock valuation, if I go to see the uh, valuation report or the stock status report, here you can see my self-evaluated price is 120 per piece. So it's showing 120. Though I have purchased it on 60 rupees, though I have received the item on the 90 rupees, but still my pricing showing in on the basis of 120, which is self-evaluated that I mentioned in the item master for my remaining quantity. So these are the method you can follow to maintain your stock valuations through Busy. Here I would also share one features in Busy, that is to maintain separate stock valuation method for item. If you enable these features, then what will happen? Then you will get an option to maintain different method for your different item. Let's say, for example, you have 2-3 items. So for this item, you want to maintain a method of FIFO. So in item creation or in item master, you will get option to select the valuation method for that particular item. So for next item, you want to change the method. For next item, you want to change the method to LIFO. So accordingly, that item wise the valuation method will reflect on your stock status report. Okay. So this was the concept and the process that you can follow to maintain your stock valuations in Busy. Further, if you have any assistance, you can call to our 24/7 helpline or you can email us at support@busy.in.